I would stick to a common theme, 3M, metals, minerals, and miners. If you look at the rest of the market, where are you going to find value? You're going to go buy AI, flip a coin. You're going to go buy, biotech stocks. The only place you can find real value right now is in that area, those 3Ms. Metals, it's two things. You've got the devaluation of the dollar has been going on since 1971. That's going to continue, so people should just be buying gold and silver, the metals, no matter what. But you're now coupling that with shortages. And so you didn't have that before. Even back in the Weimar Republic, their currency went down to nothing because they just overprinted it and they ran it into the ground. You had an abundance of metals back then. Now, in this particular case, it's a one-two punch. You've got a shortage of metals and you got a devaluing currency. It's the perfect scenario. And on the mineral side, on both sides of the border, Canada and here in the United States, is it now becoming a national security issue? We've seen what happens the second you turn your back and you tell the Chinese, we'll just get our rare earths and our minerals from you. Well, if you have a disagreement with them, they just turn it off and say, no, you can't, not going to have them. So what are you going to do? Say in the middle of wintertime, you run out of things like, for example, fluorspar. There's a mineral. People don't even know what they use it for. Teflon pans, Gore-Tex coats. There's a million things that you just have your normal day-to-day life. You have to have stockpiles of that. So I think if you look on both sides of the border, you can find companies, fluorspar, barite, manganese, scandium. I mean, go through the whole list of them. You're going to find one after another is going to be a nice buy. And then the last part of the M, the miners, they're just dirt cheap. They've underperformed compared to the price of gold and silver. And I know some people kind of scratching their head about that, but it's normal. It does it every single time. Gold and silver moves first. After that, the big producers like Newmont take off. And then the very last ones to move, normally after the last person gives up and throws his hands up and quits, then the miners just take off and explode. If people lost faith in the COMEX due to a default, you'd start to see loss in faith in our banking system, and then the whole credit facility shuts down. And that's the big concern that you'd have a cascading event. So I'm kind of hoping that we get out in front of some of these things, but my guess is you're going to see more conflict, more turmoil, and more debt over the next 12 months. And the only smart place to be would be in those three areas: metals, minerals, and miners.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only.
Thomas, it's great to have you back on the show. It's been a minute since you've been on, so I'd love for our new following how you started in the mining and commodities sector.
Yeah, hi, Callie. Thanks for having me back on. It's a great time to be in metals right now. I mean, I've got my numbers put together for 2026, and I run these out actually till the end of January 2027. The last day of January is where my model cuts off, and I still have gold at 7,500 and silver at 150. And then 1 year out for there, I have gold at 10,000, silver at 250. And I've tweaked those just slightly. I had my model silver was 125, and I moved it to 150. I think they've got such imbalances right now, shortages. I don't know how long they can keep the price of it down here. I think they're going to slide through March deliveries without defaulting at the COMEX, but it was close. And they had that technical glitch, stop trading. I don't know why they just don't tell people the truth. I mean, what they were doing is cutting deals to make cash payments rather than default. And they should just tell people that rather than making up these stupid glitches that no one believes. But, it's like anybody. If you had a neighbor who was on the verge of bankruptcy and all of a sudden he made his final payment, he got his bills paid for the month, he might sit there and breathe, and then he looks at you and goes, "Oop, I got to start worrying about it in 29 days." And that's what the COMEX is looking at. They don't have enough supply. There's not enough supply in the pipeline. There's shortages across the board. And I think it's going to get worse. And I don't know how the COMEX doesn't eventually go into default. But at least for this month, I think they've been able to massage it to the point where they're at least going to slide through.
The start of this year has been wild. You can't keep up with the pace. Every day there's something new. We've seen gold kind of come back from its correction, but silver has kind of stayed around that 80, 90 range. What are you thinking, like short term, long term for silver? Do you think that gold to silver ratio will balance out again, or do you think we're pretty happy here at that 80, 90 range with silver?
Silver's going to outperform, so it'll squeeze tighter. So, like for example, I see gold going up about 50% from here to 7,500. I see silver going to about 150. So you're talking about more like a 85, 90% return. So silver is going to do better. So the gold silver ratio is going to get tighter. But I would say from here on out, really until fiat dies, I would say every dip you get in gold, silver, platinum, people should be in buying. And don't worry about how much size you're buying. I read something really interesting the other day for a guy. Say if you had some younger people might be listening to this and they're starting to just begin their stack. If they were to take 1 ounce, go buy 1 ounce of silver per week for just the next 25 months, they'd end up with 108 ounces. And that doesn't sound like a mountain, but that actually would very quietly put them into the upper tier for silver stackers. And that tells you there's just not that many people around the globe right now that are holding silver and stacking it. And I think what's gonna happen is when it hits 150, 175, 200, those people that aren't in the market are then gonna go out and chase it and try to find it. And they're gonna have a hard time finding it. There's just, even the dealers right now, they don't have much supply at all. So I think we're in a good position right now. Perfect.
The NEPA reform is great to see for the American jurisdiction. We obviously deal with a lot of BC and Canadian mining deals here too, but what are you seeing as like the for this year out for mining as far as like in the juniors and the producers? Obviously in the States it looks fantastic, but what are you thinking for, I guess globally?
It's just a home run. I mean, I think over the next 5 years, 5 to 10 years, you're going to see people inside the metals and minerals business create just absolute generational wealth. But even in the next year, I think you're going to see just the average investor is going to outperform wildly. And I would stick to a common theme, 3M, metals, minerals, and miners. If you look at the rest of the market, where are you going to find value? You're going to go buy AI, flip a coin. You're going to go buy, biotech stocks. The only place you can find real value right now is in that area, those 3Ms. Metals, it's two things. You've got the devaluation of the dollar has been going on since 1971. That's going to continue, so people should just be buying gold and silver, the metals, no matter what. But you're now coupling that with shortages. And so you didn't have that before. Even back in the Weimar Republic, their currency went down to nothing because they just overprinted it and they ran it into the ground. You had an abundance of metals back then. Now, in this particular case, it's a one-two punch. You've got a shortage of metals and you got a devaluing currency. It's the perfect scenario. And on the mineral side, on both sides of the border, Canada and here in the United States, is it now becoming a national security issue? We've seen what happens the second you turn your back and you tell the Chinese, we'll just get our rare earths and our minerals from you. Well, if you have a disagreement with them, they just turn it off and say, no, you can't, not going to have them. So what are you going to do? Say in the middle of wintertime, you run out of things like, for example, fluorspar. There's a mineral. People don't even know what they use it for. Teflon pans, Gore-Tex coats. There's a million things that you just have your normal day-to-day life. You have to have stockpiles of that. So I think if you look on both sides of the border, you can find companies, fluorspar, barite, manganese, scandium. I mean, go through the whole list of them. You're going to find one after another is going to be a nice buy. And then the last part of the M, the miners, they're just dirt cheap. They've underperformed compared to the price of gold and silver. And I know some people kind of scratching their head about that, but it's normal. It does it every single time. Gold and silver moves first. After that, the big producers like Newmont take off. And then the very last ones to move, normally after the last person gives up and throws his hands up and quits, then the miners just take off and explode. And they're the biggest movers, the fastest movers, and they go up from out of nowhere. And that's the cheapest part of the market right now. You want to focus probably on the exploration miners. And I think just because Canada has many more of them than the United States, the bulk of my holdings would be up in Canada right now. But throughout the whole Golden Triangle, there's one nice buy after another up there. Goliath Resources, Juggernaut Exploration. You come down on this side of the border, you got Arizona Gold and Silver. Up there, you got Doubleview, you got Onyx. You can keep going through this list, and every one of you sit there and say, there's pretty nice value there. So I would say for an investor out there, if you're buying stocks, I would just put together your own small portfolio, but I would focus on those areas, metals, minerals, and miners. I think what most people are going to find out is you don't have to be the smartest guy in a room to make the most money in the room. Make it easier on yourself. Look for supply demand. Everything in life comes down to supply versus demand. Everything. I had this discussion with the group of students up at Mercier the other night, and they kind of questioned it. And I said, okay, well, how about this weekend? You walk into a bar in downtown here, you go in and let's say there's 10 girls and there's 150 boys and you're a boy. What should you do? Turn around and leave. Go to another bar, where it's the opposite. Always put yourself in a position where the supply demand is in your favor. It doesn't mean you're guaranteed victory or very guaranteed a great return, but you're putting yourself in a position where your odds of success go up greatly. And that's what you really want to do in the markets. You want to put yourself in a position where your odds of success are in your favor and then just hold on as long as you possibly can. I mean, right now you talked a little bit about some of the geopolitical issues, but there's a laundry list of them. Between the United States, Iran, Israel, then you got to toss in Hezbollah, the Houthis there in Yemen. You got to toss in Hamas. So I mean, you've got things pretty much all around the globe. So you're going to have geopolitical issues that are going to push gold and silver, precious metals. This is a safe haven anyway. So you want to have your physical metals on hand, but if you want to make, I think a good part of the market to be in if you're a stockholder, I would focus on those three areas: the metals, the miners, and the minerals, and the miners. And on the miner side, I would focus on the exploration miners.
As far as for when you're looking at exploration companies, obviously we know junior miners are a little more risky than when you're going into some of the bigger producers. What is the criteria with some of the companies that you named off? Like, is it the people, the projects?
I start with the property. I want to see the drill results. And for me, I like to look at grade. And almost hand in hand with that, I want to look at the management. Are they a person who has diluted their shares into the ground? They do a reverse split every 3 or 4 years. Because that tells you if they take good care of their share structure, they take good care of their shareholders. That tells you they're probably an ethical CEO and a good CEO. I mean, guys up there like, the people I named off, like Roger Rossmus, Dan Stewart, Mike Stark. I mean, these are guys, you could leave them the keys to your house and feel perfectly comfortable. They're stewards of their ship. I mean, they're taking good care of their shareholders. And the other part about it is, you look at the properties up there. I would say the Golden Triangle is probably the last undeveloped, vast area of mineralization maybe on Earth. What's going to come out of there in the next 10 years is just going to be staggering. So even though there's more risk on the exploration miners because they're smaller, they're juniors, I think you're going to see probably a record amount of acquisitions the last half of this year. I would say the last 6 months, you're going to see one acquisition after another. And probably what will happen in the Golden Triangle, when the first one gets acquired, it'll bump the valuations for the whole group. Because then people are going to say, okay, who butts up against this property? Now, in Goliath's case, they butt right up against Juggernaut side by side. And that's a huge advantage because that's the other thing I look at. If you look at the cash in the bank, then you look at the burn rate. How soon do they got to go back out and raise more funding for drilling? Now, Goliath and Juggernaut share their drilling teams and their geological teams, so they chop their costs by 30%. So that tells you right there's a management team that's squeezing every nickel. So whatever they raise in their private placements for drilling, they squeeze every bit of it into drilling. No matter how much I like the CEO, I want to see the drill results. I want to see it in black and white. And then I go from there. From there, I look at the share structure, and then I look at who the actual CEO is and the management group is.
As far as when you're looking at gold and silver, do you consider both of them a safe haven, or are you taking silver as your investment more as a speculation?
No, I would say in the past that might have been the case. I think now I would consider that currency. And I think, you see China, they're over there really stockpiling silver right now. I would look at that as a store of value, not necessarily a speculative hedge. It's going to run, so it's going to perform almost like a penny stock. I mean, if it goes from 150 to 250 in a year, that's a huge rate of return. But it's also a catch up. You had many years where it underperformed. And what happens is if you get in a situation again where you put yourself in the right area, everyone and their brother sees that we're devaluing our currency by overprinting it. So if you stay in precious metals, sooner or later it's going to catch up. At one point, gold led, silver lagged, platinum caught up, and then they switched around. Now silver's the leader. I would say split your holdings equally in third, a third into gold, silver, and platinum, right across the board, and try not to do too much guesswork. Just keep plowing it in there every month if you can. It'll even out over time.
In Vancouver this year, we actually, for the first time, everyone said last year it wouldn't be possible and it would never happen. But all the crypto groups were down there looking for silver stocks because it trades very volatile and similar. So for anyone that's new into the silver space, do you want to give like your commentary of what you think for some of the silver stocks out there of what to pay attention to and what to look for when you're very new to the market?
The crypto guys coming into it is probably what caused it to top around 120 when silver came back down. That was kind of the sign. When the gamblers and the speculators come in that hard on something, you're just waiting for a correction. So in some ways, I never like to lose money, but in some ways, I was kind of happy to see silver come back down a little and shake some of that out of there. As far as what that group might have in common with me, probably not very much. I mean, I look for companies, for example, Goliath, I've been buying it since it was 58 cents a share. And as they continue to show more strength in drilling, I buy more and I average up. Arizona Gold and Silver, same thing. I started buying that. I think it was like 32 cents a share. And as Mike Sark has come through with drill results, then I've averaged up. So I would find companies that you really like and you're comfortable with and make those your core. And then as they start to prove out their ground, you become more comfortable. And then put more assets into it. But as far as going out there and saying like the crypto guys, I know a lot of those guys are probably momentum players. In their case, they might be better off just finding a leverage fund like Nugget, NUGT, or there's some silver leverage funds out there that are 2 times leverage. They might be better off just playing that rather than the individual ones. I think they'd probably have more success.
What are some of the catalysts that you're paying attention to or you really think will help move the gold price or silver price here or there? Because I mean, obviously this week we saw a bunch of key catalysts and we kind of stabilized. So is there anything you think, over the next 6 months that would really push things forward, or do you think we're just going to watch a steady climb as the year progresses?
It's kind of like that saying, "What's old is new." I mean, we saw this when the first Iran Israel war broke loose. Everything else is happening. It just seems like we see this happening over and over again. The only constant part in all of this is the devaluation of the dollar. We just keep printing more debt every single month. The rest of the stuff just seems like it's just going to keep coming, and I don't think it's going to stop. We don't seem to be able to get away from the geopolitical issues for some particular reason, which just seems crazy. Someday we're all going to look back at the amount of money we wasted on all this as you drive past a crumbling school or a bridge that's fallen down and say, geez, why didn't we actually buy something with all this money? 38 trillion dollars in debt down here. You would expect if you came to America, the streets are paved in gold and there's no garbage on the side, and there's no homeless people. We've squandered so much of our treasury. It's ridiculous. But I think now they're trying to correct some of those mistakes and they're getting us back to our basics. And the next thing has to be, and this will be the next catalyst that's coming, we have to get back to a solid currency that is backed by a basket of commodities with gold as the anchor. It just has to happen. We can't go on with this fiat currency forever. What's going to get passed on to the next generation is just a mess, and sooner or later it's going to blow apart. I mean, same thing. You look at the price of silver for forever. People were yelling about it. Hey, there's shortages in the market. We can see the supply chain. There's shortages. And everyone said, oh, no, no, no. And it sat there 23, 25, 25. And all of a sudden, boom, it's 120. And everyone said, geez, how'd that happen? Well, it's like that guy who worked, 50 years, 14 hours a day. And someone said, wow, you got rich. He says, yeah, just 50 years in the making. And it's kind of like that with silver. I mean, it sat there forever and didn't do a thing, even though the fundamentals told you it should have been higher, and now it is. So I think the catalysts are going to be right there. You're going to see more wars, you're going to see more fighting, you're going to see more devaluation, you're going to see more debt, and those things all just push people right here. And in the middle of all this, the interesting part about like, the COMEX, they slid through this month as out of default, but it's by the skin of their teeth. Now, you run into a situation, let's say a few months from now, when they default on that and they can't get through it. Well, there's a chance that freezes up the entire credit facility, just like 2008. I mean, I was here back in those days, General Electric was still a big company. They were literally days away from maybe not making payroll. I worked at National City Bank at the time. There were real fears 3, 4 days out, maybe the ATMs would stop working. I mean, the credit facilities just froze across the board. Now, the worry would be if people lost faith in the COMEX due to a default, you'd start to see loss in faith in our banking system, and then the whole credit facility shuts down. And that's the big concern that you'd have a cascading event. So I'm kind of hoping that we get out in front of some of these things, but my guess is you're going to see more conflict, more turmoil, and more debt over the next 12 months. And the only smart place to be would be in those 3 areas: metals, minerals, and miners.
That's a scary answer, but I mean a great answer for gold and silver.
It's scary, but it's good, Callie, because like in your case, you're young. So I mean, there was an old line in a movie or in a song. The best part about being there at the end is being there to watch it start all over again. And that's going to be your generation. You're going to be able to sit there and watch a new currency come in place that's going to be a stable currency that for the rest of your life, you're going to have a long-term stable currency. Whereas my generation had a fiat currency and, Mercier's was 10,000 a year room board and tuition when I went there. Now it's like, I think maybe 68,000 a year. That's just because we've devalued our currency to the point where it's made things that much more expensive. Used to be, one person could work in your family. You could have a family of maybe six, eight, 10 kids. You had two cars. You went on, maybe you had a boat, maybe you had a camper, and you had a good middle class life. Now, two people, my neighbors, they both have their master's degrees. He's an attorney. Uh, they're having their second kid, and they're paying their bills. And that's because we put a ridiculous fiat currency in place, and it just robbed the purchasing power from the people. So, although what's coming is going to be a little bit frightening for the people that aren't prepared, in your particular case, I mean, you're up to your eyeballs in the metals market, so you're well prepared. But in the future, you're also going to be better off. You're going to have a stable currency to live the rest of your life with. So life's going to be better, not worse.
Do you think for the foreseeable future, we're going to see the US just try to basically inflate their way out of this? Or do you think that they're working through some ways to maybe reevaluate things?
I think they're being forced to work through ways to try to reevaluate it. Maybe, there's some economic gimmicks where they maybe revalue gold to 10,000 or 20,000, but that really only improves your economic model on paper. To get to the real root of the problem, you've got to get rid of this fiat currency. So sooner or later, whether they like it or not, they're going to have no choice but to destroy it or it's going to destroy itself. My fear would be the Chinese beat us to the punch and they just come out with their yuan-backed gold, and they bring out the new currency like that. I would like it better if we had kind of a Bretton Woods situation and the United States led the way and said, okay, we're going back to a gold standard. Here's how we're going to do it, and here's the new system. And that way we could lead rather than trying to follow. Um, if the Chinese beat us to that, then they're going to make a run at trying to be the world's reserve currency, and that's going to change a lot of things. Right now, all they're going to start worrying about is winning the midterms. So the United States is going to spend every penny they can possibly spend to goose the economy going into the midterms. We keep spending money that we don't have, and it's piling up debt. And the only way to do that is just printing more and more dollars. And when you do that, you rob people of their purchasing power.
As far as for the mining companies that you mentioned last time we talked, I think it was a year ago, but do you want to talk about some of the performance that you've seen and gains? I mean, like you said, you started with some of those companies at 20 cents, 58 cents, and obviously we're not in those numbers anymore.
Yeah, I think my first purchase on Goliath was probably around 58 cents. And it bounced up into the twos, and I think right now it's somewhere around 170, 175. So performance is good. One of the other plays I've gotten into, recently, maybe in the last 3, 4 months, was Doubleview up in Canada. And boy, the last 2 days, they're up like 45% in 2 days. But that goes to show you what happens when you do things the right way. They released their MRE, so that puts it in black and white. You can see the mineralization now, and once it's in black and white, then every analyst in the world can look at it and say, okay, now I can bump the valuation of the company because they proved out their property. So double view, I mean, there's one literally like in 2 days it went up 45%. Arizona Gold and Silver, I mean, I think I purchased that stock. The first buys were probably around 32, 33 cents a share. Today, I think it's up around 75, 80 cents a share. I still would say Goliath is going to get bought out somewhere in the vicinity of a 2.5 billion valuation when it's all done. And I think after Juggernaut proves out their property may actually end up being nicer than Goliath. I think they're going to get a valuation somewhere in that same vicinity, but it may not be for 2, 3 years after that. I think anybody who buys any of those exploration miners, the first thing they've got to say to themselves is don't worry about the volatility because there's going to be a lot of it. So if you don't like that, don't buy them. And the other part about it is do your own research. Up in the Golden Triangle, all these companies. There's probably eight, 10 really nice buys up there right now. These just happen to be the ones that I really like. But I think a person could probably put together their own mutual fund where they put together maybe 10 or 15 companies up there they really like and just hold them. And I would suspect over the next, 12 to 18 months, you're going to see some extraordinary gains in the exploration miners up there.